The new tariffs are going to go into effect on Tuesday, and the market is going to crash. Not just that, with interest rates where they are and the cost of housing, the housing market is going to crash. I mean, my God, there are more foreclosures this week than there were last week. And then on top of that, the exciting thing that we saw in the Oval Office between J.D. Vance, Trump, and Zelensky, man, that's just going to make the markets crash. Well, I got to get the clicks. I got to get people to look at the videos. So I got to change the rhetoric and be negative now. Just kidding. Stick around.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor, on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy Sunday. I hope you're all doing well. I'm actually really excited. I saw Bitcoin shot up to 93,000 a coin. Now, don't get me wrong, I don't really care about the movements in Bitcoin, but what I do like is, to me, that's an indication of what we might see tomorrow for the markets. Now, I know what I said on that opening, and I'm hoping you guys comment in the comment section and tell me what you think. But do you think the tariffs are going to crash the market? Now, my real answer is, I don't know, but until we actually see what they do, there's no reason to make any assumptions, because there's lots of good arguments on both sides of the fence that they'll slow the economy, that they'll help the economy. There are benefits and negatives of both, and until they're actually put into effect and have time to see how that plays out through things, we really just don't know. And that's a little bit of what the Fed's been saying, of they're going to wait for the data to make any decisions they make. They might have their ideas and their conjectures, just like you and I might, as to what'll happen. But the reason they wait for the data is they don't know that they're right, and neither does anybody else. So when you're watching all these YouTubes about the gloom and doom and how the markets are going to collapse and the Trump tariffs and whatever else, I just try to focus on price action and stick with the main thing, which is putting away and trying to save for the future and letting the rest be interesting noise that I like to watch, like I watch a football game. Now, as always, this is not financial advice. Please, you need to do your own research and not listen to me or any other YouTuber for that matter in terms of making your financial decisions. Reach out to a financial advisor, do whatever you do, and just look at this stuff as entertainment. You know, watch the guys you like, do what you would normally do, but don't follow their trades or rely on them. Now, I don't mean that the wrong way, because even I watch other YouTubers, and sometimes I'll take advice of things they do. I bought Booking.com, not Bicking.com, not that long ago from a video that I saw that I really liked the analysis. Now, I've been buying more Google because of ones I see that I like their analysis, but quite honestly, Google was something that I wanted to be picking up anyway. So when I see the videos that kind of say the things that I already think, it makes me feel better about it, whether they're right and I'm right or wrong or whatever. But I still enjoy the content. I still watch. And just like my advice to you, I don't really take the advice, but sometimes I'll put something on because it was something that made sense to me. But markets are markets. There are things that I don't like as well. Like, for example, the yield max funds. I made a comment on somebody's video who was talking about MSTY, about not liking it, and the response, because he just assumed that's because MicroStrategies is down currently, which in turn likely means that MSTY is also down. But I just saw the video and I don't pay attention to where the yield max funds are trading. I don't like them. Let me explain a little bit of what I don't like, and we'll talk about some of that other stuff as well. So what they do, from my understanding, and feel free to correct me if I'm wrong, is they buy synthetic long trades, meaning they'll buy a call at the money. So if you're looking at Tesla and it's trading $300, which I know it's not, you buy a 300 call, you sell a 300 put. Now, why would you do that? Now, the reason to do that is you don't have to use all the money to buy it. If you buy 100 shares of the stock, that's $30,000. If you buy a call, it's the cost of the call. The put should pretty much offset it, so it's cost almost around zero. If the stock goes up, if Tesla goes higher, you're long the 300 call, so that allows you to buy the stock at 300. And if it goes lower, since you're short the put, you're automatically assigned 100 shares at 300, also making you long no matter which way the stock goes. The advantage of that is by not having to put out the money, you have a certain margin agreement with whomever allows you to put the trade on as to what percentage of those funds you have to put up. So maybe they have to put up 25% of the money to put that option on instead of 30,000. Geez, what's that? 7,500 off. So you're at 22,500 to be able to put, or you have to put up 7,500 instead of the 30,000, saving you 22,500 of what you would need to typically put up. That allows you to either do this more times and be leveraged, or potentially buy or put that money in a high yield savings account or a short term treasury or some sort of interest bearing thing so that you offset some of the risks that you have from the trade that you put on. Not so terrible. They then sell weekly calls against that position. So they put on the synthetic long at 300. Maybe they sell a 305 call or a 310 call. The company that they're clearing through has to understand what they're doing and be okay with that type of trade. Because some of them you need to be long the stock to sell the call, just because of depending on what stage of understanding options they'll open your account to. Now, obviously, the yield max funds are going to have full autonomy to be able to make that trade. But I'm also sure there's a risk their watcher, somebody in the company they clear through, making sure that they're not taking on more risks than they're comfortable with in some ways. So here's what I don't like. If MicroStrategies goes up, that call, or Tesla in the example, forgive me, I'm still thinking Misty because that was what the video was on. So if Tesla goes up and goes above the call strike, well, they get taken on this call, and that's the most optimistic scenario because they've made the money from where the stock went to the new place of the call. They've collected the premium for selling the call, so that's all profits. But if it shoots up another $20 or $30, they've missed all of that upside move. Now, let's say the other happens. You still get to collect the money from selling the call, so that's pretty good. But as the stock falls, you have the full risk of being long anyway. So you're taking on the full downside risk of the underlying security while limiting your upside, which is generally what I don't like about covered call strategies in general. Now, if somebody understands options and they like to trade options, I tend to sell calls and puts because I think collecting premium is like selling insurance and you generally end up better off than not. And the people who are buying options are generally not doing so well. But again, I understand the risk I'm taking. I'm okay with the type of risk. I think a lot of people in the yield max funds get sold on it because they're told about this wonderful return from dividends, but they don't really understand the risk that those funds are taking because they can have massive moves really quickly, especially in the stocks that they're trading. So anyway, let's get on to some of the other topics. The housing market. It's very interesting what's going on. But as long as the economy is doing okay and there are massive job layoffs, even with what's going on with Doge and the government and what they're trying to do, and I'll tie that all in, as long as we don't see massive job layoffs where people lose jobs and can't afford the payments, to be fair, people who have qualified should be able to afford their mortgage payments and pay their homes. They may feel overwhelmed, they may be a little house poor, but there's also the people that got in when rates were sub 3% or in the threes, which is really amazing to be able to do. Most people are kind of stuck in their home in that scenario. I mean, that's where I find myself, so I know others are there too. It would be really hard to get up and move because our rate was so low, so our payment's extremely low. If we wanted to go somewhere else, it would be a huge increase in payment, even if we ended up downsizing. So you're just kind of happy with where you are. Unfortunately, we're really happy where we are. Hopefully, others are in that same situation. I don't see a housing market collapse. It's basically supply and demand. Now, you got to keep in mind, real estate is very localized. If you're living in Florida, you might be seeing a correction, especially depending on where you live in Florida as well, because it's not going to be the whole state. At least that's what I picture. On the flip side, if you live here in Las Vegas, or if you live in Montana, or some other places that there's been some real high demand and you continue to have people coming into your areas. And then on top of that, you add like Las Vegas, and we're kind of locked by mountains on either side. So we can't just build and build and build houses. So we have a limited supply, and we still have demand coming in from California and other states as people move in. And we continue to grow with more sports teams. And now we have a Hollywood studios coming here. And the other thing is, I think when people get here, what they start to realize is the summers are hot, but you get more and more used to it. And the thing they say about the dry heat is legitimately true, because I would way rather 100 degrees and no humidity than the 80 degrees and outrageous humidity that I grew up in New York. Now, anyway, I'll continue. So I just don't see any big collapse coming. So when you see the doom and gloomers and they talk about the rates being really high and the houses price being really high, that's gone along for a while now. And it doesn't seem to be changing. So same thing, I just try to watch what's going on in the market. I totally understand all the economic things going on that all the gloom and doomers talk about that sounds really good. But let me tell you, if you're going to buy your house to live in, me personally, I do not think that is an investment. I think that that is the money you're spending to get the place you live in. So if you plan to live there a long time and you think your job is secure and you can afford the house and you like it, those all make sense. If the housing market goes up or down, it should just be noise like everything else, as long as your situation doesn't change, you continue at your job and potentially get raises, and you still like your house. If the prices drop, I mean, my God, that gives you an opportunity to upgrade if you wanted to, if you're still in those positions and able to save and everything else. And if you're not, well, maybe you shouldn't be considering it quite the way you were thinking about and get in the position where you can really afford it. If you're looking at an investment home, sure, by all means, do all the math to make sure it pans out, pen to paper, where you actually are profitable and you can afford a few months if it doesn't go rented and things breaking from time to time and whatever else you have to calculate for, but totally different scenario. Then if we flip to the equities market, I think the equity market looks just fine. I don't see anything going on that causes me a big amount of worry. I actually think the pullback that we had last week was an excellent pullback. And as I said in yesterday's video, I really love to see how each time they did the press and the discussion about the thing with Zelensky and Vance and Trump, that the market would then start to fall again. It would fall right to the areas that it kind of made the lows the day before, and it would catch itself. And then by the end of the day, it seemed to be reversing and going the other direction. The fact that Bitcoin is up today, it makes me optimistic that maybe tomorrow is a good day. I'll find out how it's beginning to look when the futures market opens. But for now, like, that's a great indication that I think at last it was at 93,000. So that's up a good 8 or 9,000 from the close on Friday where the equities were. I think today's Sunday. It's in the morning, so I'll find out in maybe 4 or 5 hours where the futures are indicating. But again, sometimes they just kind of bounce around a bit until it gets closer to tomorrow's open. That being said, the reason I like the equities is there's still plenty of things that I find that I think are reasonably priced. I think as long as there's a good amount of money on the sideline waiting for that big correction to come in, we probably keep going higher. And it seems like things are settling down. As much as the antics might not be what people like, the reality is the wars seem to be getting some headway on them, and they've been going on a long time, not impacting the equities. Honestly, when I've watched the bond market and the 10-year correct, I know that we inverted again, but we inverted before and seem to uninvert, and things seem to chug along just fine. I think same thing now. I don't think it's any huge indication to worry about. And I think that as long as people have jobs and keep going out, continues to be busy. We went out to dinner last night and it was super crowded at the restaurant. We were all kind of surprised. And to me, the tariffs, to circle back to them, is one of the most interesting things going on. And I really don't know how it'll play out. Like I said, there's good arguments on both sides. The tariff is essentially a tax. I understand that. but it's also a tax, so we can collect tax, and maybe it can be offset by, they've talked about a refund to people, and I'm guessing if people got a refund and the tax went through a little bit, because things aren't going to go up literally 25%. That's on the side of like the wholesale end, and the cost that they're determining it off of. Like, maybe they actually spend more. And if it slows down certain products and picks up others because they're made in the US, well, maybe it still continues along the same lines we're already at. Like, really, I'm just waiting to see how it works and everything else. And I'm a real believer in a consumption tax. Like, I think people should get taxed on what we buy, not how much we make, because then it makes it much harder for the people who make tons of money to be able to avoid the taxes with write-offs and whatever else they're able to. And maybe it even goes on an escalating scale where super expensive luxury goods, and I'll just make numbers up, please don't read into it any other way than maybe that's a good area, and then inflation would change it, so you have to be prepared that the numbers would change. But maybe any purchase that's a luxury item over $250,000 gets an 100% tax. Like, why not? I don't think that the guy who's going out and buying a $4 or $5 million luxury yacht isn't going to buy it because the taxes are too high. And it'll make the really expensive ones probably more desirable because they'll be more expensive, and it'll be more of a competition for the people who care about that and make that kind of money. Like, I don't know, and I don't have a real number, but maybe food should not be taxed, or maybe fruits and vegetables and healthy items similar to that should not be taxed, and potato chips should. And I'm not the guy who makes those decisions, which is why I say I should, like, don't read into it. But it makes a lot of sense to me that people get taxed on how much they're spending on the things that they're using for their life. And then there's no judgment. Makeup's taxed, and, books, or pretty much everything you would go to buy outside of necessities. Maybe there's a limited amount of dollars for clothing because that's needed, and potentially like drugstore type stuff like toothpaste and the things we need in our lives for that. And then, of course, food. But I'm not sure what else I would think shouldn't be taxed. And then, if you're into whatever you're into and that's where you spend your money, well, that could be the way the government could collect the tax. Maybe we don't need the income tax. Maybe we don't need other ones. And same thing, whether it's state or federal or whomever. Like, to me, that seems like a solution that makes sense, where they wouldn't have to try to find the things the way they do because you just don't have to worry about it. Those are just my crazy thoughts on a tax system. I don't know that it's the best idea. I just know that the one we have is not wonderful, and maybe it could use some help. Anyway, I hope everybody's Sunday's going well. Yesterday was my birthday, and we had a really nice time. Went out for a nice dinner, which is why I said it was super busy. Today, my son's got some friends coming over to work on their science project, so I got to wrap this up rather quickly because they'll be here soon, and I don't want to be outside doing a video. Have a great week this week. Let's really hope it's the best week yet, and maybe the markets make new highs. Let me know what you're buying. Tell me what's going on. Don't forget, if you haven't already, hit that subscribe button, smash the like button, make some comments, and let me know what's going on.